Morning, everybody. Good morning, Cav. Good to see you. Ron, nice to have you. Rob, great to see you. How's everyone doing today? Feeling good? Sorry while I yawned in your ears. Forgive me. Been a busy day. Yeah. Morning, Jeffrey Dean. Good to see you. Erla, great to have you. Man, I love this. Hey, Andy. Nanda, great to have you. It's like waking up, going, when you walked into school in high school and all your friends were standing in the same spot and you're like, ha, it's going to be a good day. Guys, it's going to be a good day. Um, I'm excited about the day. This Tuesday, February 4th, 2025. We are already on the second month. Gotta love it. And we're checking news to see what's going on in the wonderful world of news. And at 10 a.m., ladies and gentlemen, we have red high impact news. It's the JOLTS job opening. Not sure what it means or what it means to anybody watching it, but I do know that because there is a red box next to it, the market has the potential to spike or to reverse, to go crazy, be too fast to trade. I never know what's going to happen during a news release. There's usually a group of people sitting in front of a computer just dying to react to it. So what I choose to do is absolutely nothing. I abstain from trading when news releases are coming out. So my plan has me right around 9:55. I just say, all right, let's go refill our water. Let's go pet the dog, text my wife, toast a waffle, do anything other than enter and be in a position when news is released. There's two types of people in the world. There's the people that have been burnt trying to trade news, got run over, slipped, and there's the people who will so they can learn that lesson. So I'm trying to keep you guys from becoming the people who will. At 5:10 p.m., probably none of us are trading, but President Trump speaks. That's always high impact when the president speaks. So that's exactly how they labeled it. So every morning, my first stop is news. I just go in and check it. And man, when I tell you I couldn't care less what news it is, I mean it. I'm only looking at the boxes. What color are they? Nexgen has given you everything that you need for the software right in the Nexgen page. There are two tabs under education. Join Discord doesn't really make sense because you're already here, right? We won't even worry about that one. There is the software guide. The software guide is your Ninja Trader how-to. That's the easiest way to describe it. And it begins with best practices, getting in and kind of cleaning out your Ninja Trader each and every morning, getting rid of the old data, letting it form new data, all that good stuff is in there. Building charts, muting the chat room if you need that. People have been trying to mute me for years, hasn't worked yet. There's a whole section dedicated to the screen capture program. If you go to your search bar right now, if you're brand new with me, you'll see TechSmith Capture. Click on that, have that up. That's actually how you're going to take pictures, how you're going to get private sessions with me during the classroom. That's how we have a conversation. Closing workspaces, market replay, connecting to your live account, all the Ninja Trader stuff. I encourage you guys, ask me in the room, hey Mark, I'm trying to scale my charts. I'm trying to set up an ATM strategy. It's cool, that's what this classroom's for, let's do it. But after hours, when I'm taking a nap or doing something else, that's where you're going to go to get those answers. The trading guide is where everything that I talk about comes from. I say it a lot and I mean it. There really are no secrets with Nexgen. I go to great lengths to give you everything that you need to be successful with this software as a brand new user. And I try to give it to you in the least amount of information possible. I'm a little bit of a minimalist. I like simplicity. So when you come to the website and you get into that trading guide, the trading plan is everything that I'm going to talk about today, but it is the long version. It's the War and Peace version. There's a lot of pictures and a lot of writing going on in these. And in class, we're going to simplify each and every one of these concepts in the trading plan. And we're going to do it. I'm going to go down here to resources, the frequently asked questions. And I'm just going to scroll down. These are all the definitions of the things you're going to hear in the room: stop, risk, ticks, targets. But there's one in particular that I want to point out before we start talking in depth, and that's the high probability trade. This is a trade when each indicator on every chart agrees with the rules for the trade. This is the trade that creates confidence through that memory of success when you learn how to follow the rules. This is a trade. So Steve, go to your search bar and type in tech, not text. And it should come up and give you TechSmith Capture. You can't find the search bar. So do me a favor, call Cam real quick and say, Cam, I need this thing because I can't see your computer, but the search bar is typically right at the very bottom. I have it at the bottom of all three of my screens. Whoops, that one didn't capture it. Hold on. So if you look down here where all those icons are, there's your search bar. And that's where you're going to type in TechSmith. If you don't have that, you can click on the Windows icon. I'm assuming you have Windows. And up here, we'll create a search bar. So you've got both of those. And what you're looking for is that TechSmith Capture. And then once you click on it, you'll see this icon down here. And if you click on that icon, it gives you that great big red button. It's hard for me to navigate your computer when I can't see it, but I think that's every way I know to do it. Hopefully that worked for you. If not, Cam will jump on there for you real quick and get you squared away. I suppose so. Do you have this bar at the bottom of your screen? Can you see my mouse running along the bottom there with these icons and everything? Do you have that? Okay, right click and go to taskbar settings. And search, make sure you see search box. So I'm going to do that one more time. Right click on this bottom bar and go to taskbar settings. And where it says search, make sure that it says search box. Awesome. And then once you get that search box, we're just going to go TECH. No, this is, we're just getting to the app that allows you to take pictures right now. So make sure you have that up. Let's practice taking pictures today. Practice putting them in the room. All that good stuff. So guys, we're going to talk about this high probability trend trade first. And we talk about it really because this is the best of the best. This is the easiest one. This is the trade, more than anything, aside from its potential win percentage and the confidence that comes from it, this is the one that teaches you to read your indicators. This is the trade that opens the doors for you to see the rest of the trades. Becoming a chart reader is always the first goal. It doesn't sound as exciting as being a day trader. It doesn't feel as glamorous as being a day trader, but it's your ability to read charts that's going to make you a day trader. Because chart reading is about 90% of your day. Each and every day, about 90% of your day. Once again, between 5 a.m. and 8 a.m., when I'm watching the NASDAQ pre-market, I took two trades. I took 2 trades in 3 hours. And that's okay. I'm all right with that. I played a little video poker on the side. I cooked some breakfast. I pet my dog. But what I didn't do is try to be busy instead of correct. I didn't try to make trades happen because I was bored. I just simply wait. And if they come to me, that's great. And if they don't, that's okay as well. And 90% of your day is that chart reading. 10% is getting in and out of the market because you have the advantages that you need to enter a trade. So once you get good at chart reading, a little bit of time with the software, a little bit of practice, a little bit of feedback. Good morning, Adriana. Did they finally let you off work for a day to come play with us? I like that. You're going to understand where the market is likely to continue. This likely to continue area, this is going to be your entry for the highest probability trend trade. This is going to be where the trend that's already established is likely to bounce and just keep going with that trend. You're going to understand where the market is likely to go. You're going to be able to use Fibonacci, momentum, and you're going to see these areas. You're going to say, wow, with all these advantages in place, that's a great spot for the market to have the potential to go. And you're going to understand where the market is likely to stop. These are what we call termination conditions, and I want you to pay attention to these because these are the areas that could stop the market cold. Tech Smith. If you type in tech, you should see it. The whole thing is TechSmith capture. There's all the words in the text box for you. That's what you're searching for. If you can't find it, watch this. If for some reason you can't find it on your computer, good morning, Harry. There's the link to go download it. It's a free download and it takes all of a minute and a half to make that happen. So 2 options there. If you can't find it for some reason, there's your download and it's a fast download. Really, really easy. Guys, we're going to use our chart reading to identify 3 rules. The 3 rules for the high probability trend trade. There could be more rules. We could make more rules. We could make it more difficult so you feel like you're getting your money's worth. But the reality is it only takes 3 rules to identify this pattern that has been proven to win more than it loses. Each rule, when true, there's a key phrase right there, when true, creates an advantage or identifies an advantage that's going on in the market. So your first rule in white will give the advantage of momentum. That's going to be a market that is screaming in the direction of the trend, a market that's very difficult to stop. That's our first advantage. Our second advantage is making sure that there's no termination conditions, no areas likely to stop the market in front of you, no areas that could create a big untradeable bounce, no areas where reversals may happen. That's going to give you the advantage of a clear path. Once you have these 2, once you understand momentum and path, guys, this is all you need for a very profitable, hey, good morning, Sid. Nice to have you in here. This is all you need for a very profitable, a very consistent trading plan. You can build a set of rules around momentum and clear path. And I'm going to tell you right now, it's been done, and you're probably going to see those trades in the room today. Rule number 3 is defining your entry. That's all it is. Rule number 3 is defining your entry. It is pinpointing where the market is most likely to continue with the trend. This is your entry for the high probability trend trade. So a trade is 3 advantages put together. And a trade is not your opinion that the market should go up. A trade is not your need to pay your mortgage. A trade is not, hey, look at me, hold my beer, here I go. A trade is nothing more than momentum, clear path, and entry. These 3 rules come into play on only 2 charts. That's it. 3 rules, 2 charts. Minimal, simple. That's what we're focused on right now. Your large chart is a very broad stroke of a brush. Your large chart is a very slow moving chart. It's difficult to see change on the large chart, and the large chart will define the direction of the market, letting you know which way you should be looking for your rules to be met for the highest probability trend trade. Your large chart, using the very first bar, will establish the momentum in the market, where rule number 1 needs to be true. And then Your most current bar, the first bar, will also define whether or not you have a clear path, whether or not you've reached an area that could be problematic. And man, there was a great question. Harry, you had a great question yesterday. Guys, your large chart is not based on time. Your large chart is based on ticks. It's based on the smallest increment the market can move. And there's a certain number of ticks that have to be met to create the next bar. Well, inside of this one bar with all of those ticks is where we're going to use the small chart. And the small chart is going to refine that one bar. You're going to see the movement within it in smaller bars, typically 20 to 30 bars. This small chart is going to refine that very broad stroke created by the large chart. You will be able to pinpoint your entry for the highest probability trend trade, and by using this refinement process, it's going to allow you to reduce your risk dramatically, and it's going to allow you to increase your profit potential. So rule number 3 for entry is going to happen on a much smaller chart so that you can reduce risk. Rule number 3 should only be looked for when rule number 1 and rule number 2 are already in place. As a brand new user, we're giving ourselves the best chance of success here. We use these two charts. Novak men are famous for horrible analogies and metaphors, but my brother nailed it with this one. Know who you're trading with and know who you're trading against. So the large chart, I want you to think of it as the large crowd. Every time you look at that big slow chart, I want you to picture 10,000 men and women that have the capacity, the ability, the money, the influence to create a trend. And make the choice to go with the trend they create. These are the same people that pump so much money into the market, they create overwhelming momentum with rule number 1. And tell yourself from the get-go, I want to trade with these people and their momentum. And these are the same people that are going to react to those key areas, those amazing Fibonacci areas. And you can say to yourself, I don't want to get caught up in their reaction. I don't want to be a part of their decision-making process. So I'm going to trade with the large crowd. And then the small chart is the small crowd. Still powerful people, rich people, wealthy, influential people. And they have the ability to push a market down when everything the large crowd wants says up. But here's the kicker. This small crowd, even though they can create little ripples in the matrix, they fail typically 70 to 80% of the time. So when your large crowd says up, up with strength and nothing in the way, we root for these guys to pick a fight, because when they do, rule number 3 on that smaller, faster chart is going to have you pinpointing where their failure is most likely to happen. And when you can do that, and they lose 70 to 80% of the time, your entry right at their failure point gives you the opportunity and the potential to win up to 70 to 80% of the time. So it's only 2 charts, it's only 3 rules, and we're going to break these down individually. And like I said earlier, I will give you everything that you need to be successful with this software, whether this is day 1 or day 1,000. You will want for nothing. So we're going to start and we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. We're going to break down each rule individually. We are going to look at what rule number 1 looks like, what it means to you, how to study it. Same with each rule individually. You guys have the ability to simulate, to use NinjaTrader, to get in there and really practice these rules, practice these trades, take pictures of these rules, of these patterns. And then the best part, and the first step in becoming a confident trader, is posting in the room, is taking the time to drop a picture in the room. And we're going to do that real quick, because I believe that if you really want to get good at this quickly, you need feedback. You need to know what you're doing right and wrong, and that's what Capture software is going to do for you. So if I click that big Capture button, it's a click and drag tool. Everything is click and drag, and that means that I have to push down the left button on my mouse, and if I drag it towards the bottom right, you can see that it gives me an area to take a picture. Once I release the mouse, it's going to have me capture an image. That's the camera icon. And when you capture the image, now you've got a picture of what you just saw. This is how we're going to have a conversation. This is how you and I are going to talk. Every time you post in the room, you are going to use this call out button. And I'm going to click and drag and create a nice big box. Make sure that your text color is not the same color as the background, or you'll never be able to see it. And make sure that when you double click, you see that mouse or that cursor in there, and that lets you know that you're able to write. I'm trying to find one that you'll be able to see. So in here, when you post, talk about what you see. And this is so important. I want you to describe the momentum. I want you to describe your path, whether it's clear, whether there's a termination condition. And I want you to show me your entry all the way to the exit. Complete trade. And if you do this, if you go through and every time you post in the room, you say, hey, Mark, here's my trade. This is what I saw. This is what I did and where I did it. What's going to happen is you're going to get feedback. So click copy on that picture in the bottom right. And once you copy it, drop it in the room. And that's going to open the door for a private session. You and I are going to speak like there's no one else in the room and make sure that everything is great. And here's the other thing. You can upload it, bottom right-hand corner. And it's going to give you a link. It's going to drop that picture into the screencast cloud. You can copy that link. You could drop the link in the room if you wanted to. Either way, what I'm going to do is I'm going to click on it and I'm going to open it up and we're going to talk about what you saw. The next thing to do with this link is the second half of becoming a confident trader ASAP. And that is going to be using the spreadsheet that Nexgen provides you, because when you do that, you're recognizing the looks you're going to commit to. You're learning them so they become easy. So I'm going to open up the spreadsheet. I'll give it to you guys in the room. I do every day, and I update it in the classroom almost every day. So feel free to save it over the one that you have, or just add to it or whatever. But I still have that screencast link on my clipboard. I'm going to put it in here. This is my trade tracking sheet, the first tab. Every trade that I take, I'm going to take a picture, I'm going to annotate it, and I'm going to drop it into this tracking sheet. And here is how to annotate for the best feedback, telling me everything that you see. Here's how to paste in there in case this lesson doesn't stick. First thing you're going to do is you're going to drop the screencast link in there. That's awesome, but it's not nearly as clean and efficient as it could be. So you're going to go up to Insert, and you're going to click on the link button. And we're going to create a hyperlink. Paste one more time the address into the address bar. No different than if you were going to Instagram or eBay. And under text to display, you can put long winner, you could put short loser, it doesn't matter. I'm just going to put test. And now I have a hyperlink that I can click on. And here's how you're going to use these hyperlinks in your trading log. Is you're going to come back every morning and you will study the previous day's trades. And you're doing this not because I want you to do busy work, not because I don't want you to go and sit down and enjoy breakfast, but if you do this every morning, if you go back to what you did yesterday and you ask yourself what worked and what didn't work and what made me relaxed and felt easy and what felt forced, what's going to happen is you're going to begin to recognize the patterns that are bringing you success. You're going to begin to recognize the patterns that are taking that success from you. A brief historical study each morning will prepare you for the day. It will accelerate the learning. There's no doubt in my mind. I've been doing this in my own trading for the last 5 years, and this is how I'm building trading plans and confidence. And you've got a section over here that's feedback from class. So initially, you're probably not going to recognize the patterns that are bringing you success and taking it from you. But I will, and I'll give you that feedback. And sometimes my feedback will be that this was the perfect entry. Never miss this setup. This is the best of the best. This is the highest probability trade, and you did it beautifully. Repeat that. But you'll also see where I say, okay, you traded into a termination condition. And if I see that on your chart, we'll talk about how to avoid it. And if you start seeing into a termination condition repeatedly, well, you know that that's the pattern that's taken your success. That's the rule that you can't seem to work around just yet. And we'll continue to work together. We'll continue to create a plan to help you get away from the mistake that's costing you wins. And what's cool is eventually you'll be like, oh my gosh, I have to stop trading into terminations. It's killing me. And that's a little autobiographical. That was my biggest challenge as a new user. So we're going to learn the rules. We're going to let you post in the room and get a lot of feedback. You guys are going to learn the looks so they become easy. When we talk about the basic rules, we'll break them down individually. Strong triggers, clear path, and entry. And this green section on the second tab is what it looks like to have your rules met individually. Each of these pictures has been taken by me, annotated by me, and clearly describes why it's strong triggers and what it means to you, why it's weak triggers, what it means to you, clear path, termination, high probability. This becomes a study tool for you, but you also are going to get a sheet that's going to let you begin to fill this out yourself to create that recognition through repetition. Nexgen clients are amazing. I've been stealing your trades for years. There's almost 400 of them using advantages to take trades, to manage trades. There's the high probability trend trade sequences to enter. There's management, reasons to manage as you grow with the software. Patterns that you see. Once you're a chart reader, things are going to jump off the screen at you. Oh my goodness, I keep seeing this pattern. Drop it in the room. Hey Mark, I keep seeing this. What does it mean? And you'll see that there's an awful lot in here, an awful lot of pictures in here. And then there's the build your own plan. I encourage new users, about 15 pictures a day. That's 300 pictures a month. 15 pictures a day. And what's going to happen is you're going to begin to recognize things more quickly. You're going to be able to recognize the patterns that are bringing you success. You're going to be able to identify advantages. You're going to be able to identify disadvantages. And you're going to learn how to speak to yourself in terms of advantages. Every time you look at your chart, every time you open up a chart, you're going to say out loud, you're going to scare your dog, I have momentum. My path is clear. Let me find an entry. Or you're going to say, I don't have momentum. My path is not clear. I'm not going to bother looking for an entry because I've already given up 66% of my advantages. And if you do that, if you start speaking to yourself in terms of advantages, what happens is you always know what you're getting into. You know if it's perfect and if it's one of those let it run scenarios, or you know if there's a challenge and maybe you need to manage a little more aggressively. So start focusing on advantages rather than trades, and turn those advantages into trades. So for my brand new users, let's talk about what you're going to see on your charts. Let's just give them a name. Trigger lines are a part of everything that we do with this software. There are small triggers. These are solid lines. There are large triggers. They are dashed lines. This is the fast moving average. This is a slow moving average. I'm going to remind you that you do not have to know how to build a watch to be able to tell time. You don't need to know the technical side of these. You just need to know that these are fast. These are slow. They look the same on every chart, every time frame, and you're going to use them first to identify momentum, then to identify termination conditions, and you're also going to use them to identify entries. So know the difference between the two. And then we use areas. Areas are essentially horizontal lines on a chart, and these areas show up on every chart as well. So let's name them. There are divergence high lines, which is a magenta line, that's fancy word for pink, that comes off of a pivot if there is a loss of momentum at that pivot. If price is screaming up and reverses and momentum didn't follow price, you're going to see this pink line. So every time you see divergence, I want you to say to yourself, there was a loss of momentum here. And that's going to be valuable in management plans. You'll see a negative number print off of that pivot as well. It's a byproduct of the calculation in the software. Teach yourself to ignore it. Oh my gosh, Steve, I hope he's okay. Femur's a big break. I hope he was doing something fun. Divergence lows are a cyan line that prints off of a pivot. Divergence is a loss of momentum. Price went down and up, momentum didn't follow. There's your cyan line. The negative number is a byproduct of the calculation. Don't give it any weight. You're going to see Fibonacci resistance, which is a red line that runs horizontally. There is Fibonacci support, which is a blue line that runs horizontally. You're going to see yellow one-to-ones. These are fibs that print in the moment. And if the market's moving up, they behave as resistance. And if the market's on its way down, they can behave as support. And then you're also going to see the mid-band. And the mid-band's going to run through the middle. It's an exponential moving average. That's a lot of syllables. If the price is above the mid-band, you'll see it as a green mid-band. It can behave as support. And then when it turns magenta, it means the price is below it. It might react as resistance. So those are what we're looking at. Let's learn how to use them to recognize advantages to get into the highest probability trend trade possible. So large chart leads the way. I can't stress that enough. Large chart leads the way. Large chart will tell you when it's time to look for an entry. And that's only when you have momentum and a clear path. So let's start with momentum. Momentum comes from strong trigger lines. Strong trigger lines only happen if you're trading in the direction of the trend. So let's let the large chart define trend first. If the background on the large chart is green, the market is going up. I'm looking for rules to be met for high probability trend trades long. If the background on the large chart is red, the market is going down. I'm only looking for rules to be met for high probability trend trade short. I'm just going with the flow. That's all it is. And then when I have the uptrend, in order to have strong triggers with that green background, I must also have green small triggers, and I must also have green large triggers. Same is true. Red background, red large, red small. It's the only way it works. If the colors don't agree, triggers with one another or triggers with the background, you don't have strong triggers. Rule number one isn't in place. So in a green background, uptrend, small triggers must be above the large triggers. The large triggers must be wide, angled in the direction of the trend. We're going to take a picture. And it's the space created between the small and large. And I want you guys to picture scissors. So when scissors are open, you can cut, you can get work done. When there is space between those blades, you have everything you need to cut. Same is true in a downtrend. All of the colors match. Small's below the large, large or wide, scissors are open. Guys, when the scissors are open, when the space is present between the small and large, the odds are favorable for the market to push up. The odds are favorable for the market to continue down. Odds favorable momentum, OFM, you're going to see it annotated on charts all day long. Odds favorable momentum is our first advantage. Momentum, strong triggers, push the market in the direction of the trend with pretty good force. Strong triggers can break key areas. Strong triggers can even cover mistakes that new users make. So the commitment to strength in the beginning creates a huge advantage, one that I prefer to not do without. And eventually scissors close. And when the scissors close, when the smalls work their way back to the large triggers, we call this a weakening of the large triggers. And when I have weak large triggers, anything can happen up or down. And there's a very distinct difference in the language. One look gives me strength, where the odds are favorable for the market to push. One look gives me weakness, when anything can happen up or down. Your job, and probably the biggest challenge that you're ever going to have, is being patient enough to wait for that strength. And this is just the S&P. And then there's strong triggers that turn into weak triggers. And we get these bounces, and trigger colors don't agree with the background. And there's nothing to do. It's a transition. There's a fight between buyers and sellers. Not only is it in between Fibonacci areas, but rule number one keeps you out of it. And eventually they break out and they create the momentum that you're looking for to continue down. Tony, I had no problems with it this morning. You can always get with Jason, see if he can help you out. So can you guys give me a Y in the room if you're with me? Strong triggers are always strong triggers. It's separation between the small and the large. It can push a market in the direction of the trend. Here it is on crude oil. And I want you to see something. With those strong triggers, you're going to see tails. You're going to see wicks on this large chart. And those tails happen. You're still catching up, Steve? Okay. Well, you're new. You don't have to be there yet. Let's take it a step at a time. Separation until the separation is gone. This is your advantage, number one. Sometimes when that advantage is present, you're going to see these tails or these wicks on a large chart. Remember, the large chart is a one-bar endeavor. This happens when price gets below the midpoint of the bar, and this tail or this wick is actually that retracement or that pushback from the small crowd on the small chart. We're going to use rule number 3 to pinpoint precisely where these tails are most likely to form. Each and every tail that you see when you have odds favorable momentum and a clear path is a potential entry on that smaller, faster chart. You're going to use this later to study this pattern. So if you go back and you look again, I'm going to open this up. When you see strength, either a broken area, the potential to break, or a clear path, you're going to start circling these tails, and you're going to go back historically and you're going to say, hey, check it out. This might have been an opportunity. Let me go back and look at that pattern. And sometimes you won't get them. And very often your patience is rewarded and you may get 2 or 3 in a row. So we're going to look for our opportunities after the fact to learn how to study this pattern. But first we got to learn all the pieces. Rule number 1, strong triggers lead the way. Strong triggers push, strong triggers break, strong triggers cover mistakes. Strong triggers are what we're looking for when we're going to go back and study this trade historically. Once we have all that strength, you observe the market moving from top to bottom, vice versa, but there were no clear entry points. So Harry, anytime you see the market move and you're like, I just didn't get a trade, and that happens a lot, especially as a new user. Especially as a new user. What you can do is you can go back and you can circle those. Which market were you looking at? Because there's no doubt in my mind that there were opportunities yesterday, because I know a lot of people that made a lot of money. Black Prince, we'll talk about that when we get to entries. Give me just a couple minutes. Harry, I know there were opportunities in both the S&P and crude oil. And remember, guys, just because you didn't see them as a brand new user doesn't mean they weren't there. Circling these tails, going back and looking at them is going to be one way you can go back and see what you missed. It's a way that you can go through and study the patterns. But let's go through and finish with these, and let's see what we have. And Harry, what market were you looking at? Because I can tell you as a brand new user, I would tell my brother that my rules weren't met once in the whole day, and then he would go back and show me where they were met 10 times. And it just meant that I had to learn these rules a little tighter to be able to catch them. Once momentum is in place, we're going to look for that clear path. We're going to make sure there's no termination conditions. And a termination condition is a Fibonacci-based indicator that may reverse the market based on a comparison of the Fibonacci area and the trigger lines. Man, that's wordy, isn't it? Let's do this. On your large chart, a termination condition is a horizontal line. It's a horizontal line. It's a divergence high or a divergence low. It's resistance, one-to-ones, or Fibonacci support. And these are all of the areas, guys, where the large crowd is likely to make decisions, where the buyers buy and where the sellers sell, and where fights happen and reversals can take place. And every time price gets in one of these areas, there's the potential for a decision. And a decision means that there could be a retracement or a fight or a reversal. So we're going to use a comparison of the lines and the triggers to decide whether or not we should pump the brakes and wait. So the first step, if the large crowd is making decisions at these areas, we're going to allow the market to get to the area. Price reaches the area. Green Renko bars come up and reach Fibonacci resistance. They reach a divergence high. They reach those yellow one-to-ones. And once they reach the area, the decision-making process is set off and we no longer need price. We're going to let the triggers tell the story. So I want you to ask yourself, where are my triggers? If your triggers remain below resistance, it's a termination condition. This termination condition could create an untradeable bounce. That could be the reaction. This termination condition could break. That could be the reaction. This termination condition could set off a fight that dissects that fib for the next hour. That could be the reaction. Or it may reverse the market completely, making those large triggers go from green to red. That could be the reaction. I want you to accept right now, day 1, day 2, day 3, that you will never know what the reaction is going to be. You can guess, you can speculate, but you will never know what the market's going to do. So if price reaches resistance and the triggers remain below, your highest chance of success comes from doing absolutely nothing. No trades into the area because rule number 2 isn't met. If that termination condition reverses the market, large triggers go from green to red, we are going to designate it a strong top. A strong top is the precursor to the highest probability trend trade you could take. A strong top is rule number 1 for at least 3 trades going the other direction. A strong top isn't mandatory, but it increases the likelihood of success of that high probability trend trade. So know that when the reversal, when that decision that was made was so impactful, it reversed the market and gave you your rules met, that's the best of the best. And then the market's pushing down, it keeps going, price reaches Fibonacci support, we're done with price. The decision-making process is set off. I never know what the decision's going to be. So if my triggers remain above support, rule number 2 isn't met, absolutely no trades into that area. Wait for the reaction. If it reverses the market, we're going to call it a strong bottom. And a strong bottom is the precursor to the highest probability trend trade you can take. It's not mandatory, but there's a lot of warm fuzzies associated with this look. So let's go back and let's check out a big chart. And I love this. Weak triggers is already your first red flag, and then the market reverses up to resistance, every trigger line remains below, goes to a divergence low, every trigger line remains above, goes to resistance, every trigger below, and then they push down. Momentum breaks this one, but you can see there was a reaction right to Fibonacci support to the tick almost, triggers remain above, and it creates a strong bottom, and the market goes up. And it's resistance that just created the big retracement. If you go through and you learn how to identify a termination condition, you're going to realize that trading into them is going to create a loser more often than it creates a winner. This is the day before Thanksgiving. This is 36 times termination conditions kept you from taking a loser. 6 times the areas broke. 36 versus 6, guys. There's a math thing in there somewhere that says, hey, don't trade into lines. But the areas do break. We've identified when not to trade into them, when we need to wait for the reaction. And that is every time price reaches Fibonacci resistance, where are the triggers? They're going to remain below, even if it's for a moment. Wait to see what the reaction is. It's either going to roll or it's going to break. Those are really the only 2 options, honestly. With momentum, if your small triggers absolutely smash through the area, but those large triggers remain behind, Fibonacci resistance is not broken yet. But because of that momentum, because of the trigger location, 50% or above, 50% or below, this is an area that has the potential to break. This is a medium probability trade because the area is not broken yet. There's a lot of opportunity in these medium probability 50-50 trades, but they must be managed assertively, because you're working without the advantage of a clear path. The path is only clear when both small triggers and large triggers, both lines of each, get above Fibonacci resistance. When this happens, Fibonacci resistance behaves as Fibonacci support. The path is clear and it will remain clear until you reach the next area, at which point you're going to start the process over. Price reaches support, triggers above, sit on your hands. It's okay. Small smash, large haven't made it. All the momentum in the world. There can be opportunities here, but they must be managed aggressively. Smalls and large get below support. Support is now resistance. The path remains clear right up until I reach the next area. You guys good with that? So we have none, potential, clear. And if we go back to the large market, or to that large chart again, let's take a look at it. Let's go find somewhere where I can see all 3. My goodness. The fibs keep holding way too well. All right, here we go. 50-50, it didn't break. Never got your momentum. Potential to break but didn't. Potential to break but still had a huge retracement. Not quite the potential, resistance holds. This is one that I want you to see. Even with odds favorable momentum, support creates an untradeable bounce. Never even had the potential to break. No reason to lose money in these scenarios. Potential to break, did not. Almost the potential to break, but did not. No potential at all. Resistance holds, starts the move down. Look at the bounce. And here the area breaks, right? And look, it pulls back and uses it resistance, and it goes right down to the next key area. Guys, go take some pictures of this stuff. You'll be amazed at how often these areas hold and how you can see how they had the potential or whether they broke. And there will be times, talking to you new users that haven't seen it yet, Black Prince, Harry, Steve, Organic, there will be times when your path isn't clear because the areas are stacked a bit. Fib after fib after fib, or any combination of those horizontal lines that could stop the market. This is 90% of your day. It really is. It's 90% of your day. There is so much doing nothing in trading. Find a little side gig, playing cards or Scrabble or something on the computer on a different monitor. The futures markets trade billions of dollars every day. Billions of dollars every day. You don't have to be in every move. You don't have to be the first one in. You don't have to be the last one out. The whole idea and the potential that you're going to see by the end of this classroom, if you haven't already seen it, is that yes, in fact, you could make between $400 and $500 a day pretty consistently if you wait for the rules to be met, and that puts you in a six-figure income. $400 a day is a six-figure income out of a market that trades billions. It's okay to do nothing. So I'm going to ask again. I love the whys, guys. It lets me know that you're okay. If price reaches an area, look what rule number 2 did. If price reaches an area and the triggers don't break, no reason to take a trade into that area. And look what it did. Support, no triggers. Support, no triggers. Rule number 2 is defining consolidation. It's showing you where the market has to break out of, and they broke right back into the consolidation. You guys know exactly where the large crowd is likely to fight long before their fight ever sets off. All you have to do is choose not to be a part of their fight. One of the things that I notice on this chart is 1, 2, 3 divergences in the same price range. This is the termination condition on the large chart. This particular 3 divergences took over an hour to form. Keep that in mind. Because when I have momentum on the large chart, when I have a clear path on the large chart, there is one time on the small chart that I'll choose not to enter that high probability trend trade. There is one time where I will choose not to take that pullback to an area inside of triggers. And that's if 3 divergences, 3 losses of momentum print on my smaller, faster chart. Guys, this is your small chart showing you the change that you can't see on the large chart. The large chart is big and slow. Inside of one bar is all of these bars. And if you see 3 divergences print, it may terminate the trend, whether it's from a low or a high. If you see 3 divergences with weak triggers, it's more powerful. If you see 3 divergences and that third divergence is higher than the previous or lower than the previous from a high, it's more powerful still. And I want you guys to write this down, use your dictaphone, whatever you need to do. That is the only time when I have momentum, when I have a clear path, that is the only time that I'll allow the small chart to talk me out of a high probability trade. But if that's not present, we're going to embrace a little precision, guys. Rule number 3 is going to define where the trend is most likely to continue. Rule number 3 is going to define where the small crowd is most likely to fail. Rule number 3 is so specific that you're going to use a limit order. You're going to wait for the market to come to you. And Black Prince, I will go through that. as we discuss entries. And you're going to use a limit order at an area, at a fib, at a mid band, at a yellow 1-to-1. And that area needs to be inside of triggers. And there's a very real reason for that. Your trigger lines are going to define where that fight from the small crowd is most likely to go. Oh, sounds good, Adriana. Enjoy your day. And then this is recorded as well if you want to go in and take a look at it after market hours. Guys, price may return to the large triggers on both charts. It's a moving average. There's some math thing, regression of the mean. I'm an English lit major. That stuff escapes me. But what I do know is that when the small crowd starts fighting, their fight may go to the large triggers on my entry chart, the 5-1 chart, but it may also go to the large triggers on my large chart, my chart that leads the way. So my entry chart is going to have 5-1 and 13-2 large triggers on it. We call these synthetic, the 13-2s. And all these trigger lines do is they define where the retracement is most likely to occur. And it creates a zone. You put a box around them from the highest to the lowest. This is where price bars may retrace. Does that make sense, everybody? This is a huge part to accuracy. This is a huge part to managing risk. I want you to remember that. Triggers define the retracement. So when your large triggers and your synthetic triggers are one on top of the other, like two snakes riding piggyback, this is what we call favorable large triggers. They're both wide in the direction of the trade. They're one on top of the other. And when they are, that yellow box creates a really small space where you anticipate that retracement to go. And then when you put areas inside of it, fibs, midbands, or yellow 1-to-1s, the accuracy defining where the market is most likely to bounce and continue with the trend, it's overwhelming. And this is going to be able to minimize risk. This is going to be able to maximize your profit potential. So for the brand new user, what we call favorable large triggers is great. So we're going to use a limit order to buy or sell that pullback, that fight from the small crowd. We're going to do it at areas, and we're going to insist that those areas are inside of triggers. So let's go through one real quick. This is piece by piece, how you're going to think through your entries, how you're going to identify your amazing entries. Once the rules are met on the large chart, remember, once I have odds favorable momentum, once I have a clear path, I'm going to turn my attention to the small chart to find my entry. And if everything is going up on the large chart, everything is probably going to be screaming up on the small chart. If it's not, something's wrong. So you're going to see strong triggers and you're going to go, man, look, there's my trigger lines and there's my areas, and this market is just running without me. So we're going to wait for the reversal bar. We're going to wait for the small crowd to begin its fight. The small chart, guys, the reversal bar is not your entry. Okay, I see what you're saying. And I will correct you, Harry. Can I go through entries real quick? And maybe that'll help a little bit. Awesome. Do not let me get out of this room without you feeling 100% confident in the answer, though. And I will get it for you. The reversal bar on the smaller, faster chart begins the pullback. It begins the fight from the small crowd. This is not my entry. This is going to tell me, hey, where are those triggers, large and synthetic? From the top line to the bottom line, draw a box on it. This is where price is most likely to retrace. This is where that down is most likely to go. But that's only a piece of the puzzle. The trigger lines are not my entry. My rules say that I will buy this pullback at an area, fibs, midbands, or yellow 1-to-1s inside of triggers. So from the highest point of support to the lowest point of support inside of triggers, this is where the market is most likely to bounce, where it's most likely to continue, where the small crowd is most likely to fail. Are you guys with me? Wait for the reversal bar. Identify where the retracement is most likely to occur. Identify where it's most likely to bounce. And then you're going to right-click on your chart below price and activate a limit order, buy limit 2, about 2 ticks above that area inside of favorable large triggers. And what you're doing is you're saying, all right, small crowd, if this is going to be my money, if this is going to be my trade, this is where I'm going to enter because this is where my highest chance of success is. So Black Prince, your question on limit orders, and let's just do this. Let me pull up two charts. Are you curious how to activate them or where they go? Because we've defined where they go. But if you need help with activation, cool. So let me do this. This is the S&P, and hopefully it doesn't spike too much. So I'm going to squish my small chart. If I'm looking for a short trade, if I'm going to sell resistance in an area inside of triggers, I'm going to have to right-click above price, and it's going to give me the option, sell limit 1. And what that means is that if price comes up and reaches this particular entry, I'll be in a short position. I'll be expecting the market to go down with the trend, with momentum, all those good things. If I'm looking for a long trade, like in this picture, price is above me, and I want that retracement to come back to me at the areas inside of triggers. So I'm going to have to, where's my small chart? I'm going to have to right-click below price, just above that area inside of triggers, and I'm going to put a buy limit. And what this buy limit means, and this is into a termination, so probably not a trade, it says if the market comes back to 60.31.50, I'll be in a long position. And my expectation is that the market will go up. So you'll have targets above you. You'll have stops below you. And what we're going to do is we're going to focus on the accuracy of the methodology to a point to where you feel comfortable. If the small crowd has it in them to push back to that area inside of favorable large triggers, you'll be in that long trade. You'll be in that long trade with the advantage of momentum, with a clear path, with absolutely nothing in the way. Does that help a little bit? So the limit order lets you wait. It lets you call your shot, and you can activate it long before the market gets to your order. Where's my small chart? Bum, 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 bum. So once again, just large chart rules aren't met, but if the yellow 1-to-1s were supposedly my entry, my area inside of triggers, I would right click and I would buy limit 2. And I would wait and see if that retracement came back to get me. And if it did, we'll see if we can get it closer. Maybe we can get a little something. I don't know how much they're going to scream. They're coming from a termination condition. If they come back to 60.34, that area of support inside of triggers, I'll be in a long position. I'll be in a position where I anticipate the market to go up with the large chart, to go up with the momentum of the large chart, to go up with what is now a clear path of large chart. And all I need is that fight from the small crowd. Come on, small crowd. I'm trying to teach a live class here. Does that make sense, Black Prince? Does that help a little bit? If they can push back and get me, I'm in. And this is actually right on the reversal bar marker. So I'll put it a tick below, because normally I would wait for there it is. So let's see if they get me. All right, so now I'm in a long position. I'm in a long position with momentum. Hell, I'm in a long position with a clear path. And it bounced right off the area of support inside of favorable large triggers. You haven't had success with it? So Black Prince, you've been doing this for a day, right? I believe yesterday was your first day with us? Okay, so I'm going to say something real quick, and this is important. You haven't had success with it in a day. One day. This is a career where 94% of the people do it, don't have a plan, and fail. Don't put the pressure on yourself to be successful with this on day one. The software is amazing. The rules for the high probability trend trade have been proven for 20 years. They're testable. You build trust in them. But Black Prince, you're in your freshman year of college, and you're mad as hell that you're not successful at open heart surgery from the education you're going to receive in medical school 4 years from now. Does that make sense? This is why I break everything down individually. This is why I tell you, learn each rule individually, learn how to study it, commit it to memory until you're comfortable with this entry. And some people it takes a week, and some people it takes a month. But the more complicated you make it, the more you look for trades as opposed to advantages, the longer it's going to take you to get to where you want to be. Nobody wants to hear, oh man, it's going to take some time. And I'll tell you right now, Black Prince, I am as alpha male as they come. And in my previous career, I was the guy with all the answers. I was the guy that people came to learn how to do something. And when I wanted to start learning the software, it was difficult for me to flip the switch to the student role. So I'm going to encourage you, be a student, learn some things, be willing to make mistakes, because the reality is we have simulators. We have simulators for you to practice on. It's like the batting cages, or it's like the driving range, or shooting free throws with nobody trying to block it. Simulators where you learn the patterns. And then you get to go live and test the patterns. Don't push yourself to be great at something that some people spend decades to learn. You won't have to, because we've already made all the mistakes for you. Don't put the pressure to be great at it on day one. That's not fair to you. You wouldn't expect your 5-year-old to be good at algebra when he just started kindergarten. So this is what it looks like start to finish. And Harry, we're getting to your question pretty quick. The reversal bar signals the beginning of the pullback. At the time of the reversal bar, identify your triggers. That's where the pullback's most likely to go. Identify the areas inside of triggers. This is where it's most likely to bounce. Activate your limit order. This particular trade, you probably had 3 or 4 minutes before the order was filled. Anything below the triggers in a long trade is not a part of the equation, guys. This is outside of that window where it's most likely to continue and bounce. This is where the market should not go. For short trades, it's the same thing. Large chart rules are met. Wait for the reversal bar. Once you get it, define where that retracement's most likely to go inside of the triggers. Visually see where it's most likely to bounce, the area inside. Activate your limit order below the lowest point. That's your entry. Anything on the wrong side of the triggers is where the market shouldn't go. This is where your advantage is gone. Guys, that's the precision. And once you understand where the market is likely to continue, when you take the time to learn this concept, you do understand where the market should not go. And this is your initial stop placement. You're going to put a protective stop 4 to 5 ticks above those trigger lines where your advantage is no longer present. And I'm going to tell you, anything that wins 70 to 80% of the time, ladies and gentlemen, it will lose 20 to 30% of the time. That's math. Which means that you're not worried about the results in the beginning. You're worried about the flawless execution of the rules. Because once you pinpoint this area, you can minimize your risk. And even more so, with all those advantages, once you get a reversal bar in the direction of your trade, you can minimize your risk even further. You can redefine where the market no longer should go. And it's not uncommon to see Nexgen users take these beautiful sniper entries, and even if the small crowd decides to push lower, they take minimal losses instead of the big losses. So there's a little bit of a lesson. We've got to learn to identify momentum first. This is it. Momentum is the easiest lesson you'll ever get. Separation between the small and large, all the colors agree. That's it. Know the recipe. And then you've got to define where the market is most likely to continue. Define your termination conditions. Whether it is broken, has the potential to break, or is a termination condition. And then, Harry, this is how we're going to get into answering your question. When the large chart rules are met, when I have momentum and path, the large chart is trading right about here, real time. So I'm going to draw an arrow all the way down. And this is about 12:50 and 30 seconds when the reversal bar prints. And that's the top of the bar on the large chart. Is everybody with me right now? I wait for the reversal bar. This is where the market is trading. The market's only trading like 8 ticks from trouble, guys. That's not a lot of room. Inside of this one bar, I get the reversal bar and I get the push all the way down to my area inside of triggers. This is my entry. Suddenly my 8 ticks is 30 ticks. Suddenly I've gone from the potential to make $80 to the potential for 300. Still inside of this bar though. Harry, I'm still working inside of this bar. I'm going to get movement up. In 2 ticks above that previous pivot, the top of this bar, this is where my next bar starts. This is where the second bar begins to print. So Harry, this is why it looks like you're going through a time warp. Because if this bar, if the reversal bar prints at 1250, and the next bar doesn't print, and it looks like it's about 1256, 1257. So we've got 7 minutes worth of price action on the small chart. Downs, bounce, up. Everything that occurred on this entry, Harry, is still inside of that one bar. So your timestamp is going to look like it never changed on the large chart. But on your small chart, because you're using that refinement chart for the inner workings, it's going to look like it's kind of going. So you see this goes from 1249 to 56 to 57 because it sped up a little bit. This goes from 49 to 57. All of this happened right here. Does that make sense? Does that help a little bit? And if we go to the large chart, inside of this one bar, from the very top of the bar to the bottom of the bar, is all of this movement. And this is about a minute, so that's about a minute. So that's kind of, it's moving pretty fast. But if you go back to when the market was slower in the middle of the night, let me see if we can find a good spot where it wasn't really trucking. There was a lot of movement overnight. I mean, they were getting it. We'll see what happened inside of this area right here at 4:30 in the morning. I missed it. There it is. That's that one bar on the large chart, and it went from 410 all the way to 440. This was a 30-minute print. This one section took 30 minutes, and all of that happened inside of it. I hope that clears that up for you a little bit. But the timestamps just don't match. But here's the cool thing. What does match always is price. So you can go back and you can compare the price action and do it. Awesome. Great question. Never really occurred to me that would be a question. So I appreciate it very much. It makes the classroom better. But guys, going back and using those tails, right? When I have momentum, when I'm broken or have the potential to break and I circle that tail, being able to recognize that pattern, that's all we're doing as brand new users, is we're learning how to recognize that with momentum and a clear path, there's a potential entry. And with momentum and a clear path, there's a potential entry. And with weakness, even with a clear path, we can get bigger retracements. And then once again, momentum, potential to break, there's a potential entry. Over and over, guys, this is the NASDAQ. Terminations work. Terminations work. Momentum pushes. Terminations work. over and over all day long. There's one of those tails. So Black Prince, I hate to hear that you're not having success on day one, and I got to remind you that that's pretty normal. I'm going to give you some stuff to fix that. I'm going to give you some things to do that'll make it easier for you to be able to catch these trades. So it's going to start with Chart Reading 101. Whoops, that's on the wrong page. Chart Reading 101. In order to get to where you want to be, guys, you've got to recognize these individual pieces and then piece them together to create a trade. So one of the things, so Black Prince, I'm going to address that as well in just 1 second. And I don't know, I hope you were on Simulator brand new. I hope you didn't sacrifice your money into the market. If you did, welcome to the club. We've all done it. But one thing that is true is that the world is a wonderful place now. And you can practice these things with zero fear of loss and get comfortable before you risk a penny in the market. That's one of the things I love about what we do. So you must be able to recognize some looks and patterns quickly so that you can catch these trades. And this is going to reinforce the lessons and speed up the process of becoming a chart reader. And the chart reader is going to define your advantages. So take 25 pictures, strong triggers, weak triggers, clear path, termination. Take pictures of the entries. And if you do this, if you go through this exercise, if you fill out this section, and guys, I've given you a huge head start, you will be a chart reader. And don't just take the picture, and this is what I want to show you. When you take the picture, strong triggers, small and larger, up and wide, space between the two, odds favorable momentum, rule 1 met. Without question, right? That is strong triggers. And without question, that is weakness. Annotate it. And there is strength. And there is weakness. And there is strength. And there is strength. And here's the deal. If you do that for each of these, you'll never trade without the advantage of momentum unless you choose to trade without the advantage of momentum. You'll never get caught trading into an area that is likely to stop the market if every time you look for a trade, you say to yourself, where is price? Where are my triggers? Holy crap, I don't have a clear path. Let me sit on my hands and do nothing and wait for the reaction. So your rules are a safeguard. Your ability to recognize them is what creates that safety. So take pictures, annotate the pictures, create the correlation between brain, what it sees and what it does and what it means, and then you'll piece these together to create the trade eventually. And I know that feels like a lot of work, right? Oh my gosh, you want me to take all these pictures? Oh, I'm going to give you everything, Black Prince, I promise. Everything you need, I'm going to give to you in a zip file you can download right from the room. You will not walk out of this room without every tool necessary to be successful with the software. Promise. Nope, I'll do it right here in the room. But I'm going to give you more gifts. That's not the only one because we're new. So I'm also going to give you the high probability trend trade checklist because it wouldn't be fair of me to tell you to go take these pictures after 45 minutes of hearing what they are. So this high probability trend trade checklist is designed to get you into the market with the highest probability trend trade possible. That's why it includes a strong top or bottom. It's not mandatory. You can take it without. If you look at the rules don't say a strong top or bottom. But if you add in a strong top or bottom, it increases the likelihood of success. And a strong top or bottom is that termination that reverses the market. As you're taking your pictures, this is momentum always in an uptrend, and it describes exactly why. This is momentum always in a downtrend. It describes exactly why. This is weakness. So you need to know the difference between strong and weak. Take a trade, avoid a trade. And then for termination conditions, this reminds you of the language. Price reaches the area. If none of the triggers are through, the area is not broken, it's not a clear path. If the small are above and the large are below, as long as there is odds favorable momentum. What's odds favorable momentum, Mark? Oh, let me scroll up one. There it is. This area has the potential to break, but it's not broken. until the small and the large go through. I encourage you guys to learn the language associated with the rules, to write the language on your charts, to build these lessons, and then all the way down to defining your areas. All the way down to defining your areas. The second page is the actual checklist without the pictures. Print this out, put it on your desktop, laminate it, use a dry erase marker, and every time you look to enter a trade, police yourself. Every time you take a picture of a trade, use this language on there. Never had anybody in the history of this checklist do worse than 70%. Harry, is it okay if I do it the way I typically do it in the second hour? I'd like to go through all the pictures in order and give feedback. Okay. With newer people, I don't ever want you to think I'm ignoring you. I try to go in order, but if it's something that you need attention right now because it's on your brain, I'd be happy to. Use this checklist, use the language. And then I'm also going to give you what I call the KISS plan. In the KISS plan, this is a lesson on rules. Let's take a look at it. So let me open this up, guys. This is strong tops and bottoms. So Harry, in order to define a strong top or bottom, there it is. It's a no triggers through termination that reverses the market. See how that's a termination? Price reaches resistance, no triggers break through. This one's worth going after right now. Price reaches resistance, the triggers don't break. It takes both lines of a trigger line to get above. That's a termination. Do you see it, Harry? Black Prince, does that make sense? Price reaches support, absolutely no triggers break through. That's a termination. All that says to you is no more trades into resistance, no more trades into support. A termination that reverses the market, makes those large triggers go from green to red, now it's a strong top. A termination that reverses the market is now a strong bottom. And look at this, it took 1, 2, 3, 4, 5, 6, 7, 8, 9. It took 10 bars worth of data, 10 bars worth of price action to turn this termination into a strong top. It took 4 bars to turn this termination condition into a strong bottom. That's all that is, Harry. This is showing you the definition of a termination condition and how that termination becomes a strong top or bottom. And then if we back it up, you can use that strong top or bottom to add a little giddy up to your high probability trend trade. Great question. And yeah, those are the ones I don't want to wait till we get to the trade pictures. I want to do that one right now. That's reinforcing rules. So the Keep It Simple Sunshine plan. And I want to give a little background on this plan because I've got a lot of new people in the room. I had a gentleman call me once. And essentially what he told me is Mark, I'm struggling. Mark, I've had a horrible month. Mark, I can't find any trades. And I asked him, and I said, what are you looking for? What do your rules say? He goes, well, I'm trying to do that trade that John does, and then I'm trying to take one of those trend trades that I heard you talk about, and then I'm trying to take that 50-50 potential to break trade, and there's HVA trades I saw in the manual, and I'm trying to get this momentum trade. And I remember somebody posting a picture of what they called an edge trade, and I've got 8 different trades, and I can't seem to find any of them and win. The only thing I'm finding is losers. Does anyone other than me identify with that story? Looking for everything and finding nothing. Trying to be in every move and picking the wrong moves. Guys, I've done it. Everybody's done it. So when I took this phone call, I said, you know what? Let's try something. Let's do something crazy, if you don't mind. Let's simplify. Instead of looking for everything, let's look for 1 or 2 things. Let's look for things that have been proven to win more than they lose. Let's look for trades that have fewer moving parts, that can be managed well. And that's where the KISS plan came to be. It was just an attempt to simplify for a gentleman that was struggling. With this KISS plan, if you learn this, I've got people that have gotten funded in those prop firms in their first 30 days with Nexgen using this KISS plan. once they learn the rules. So this KISS plan is a stepping stone in your learning journey. This isn't the only trade. Far from it. This is the trade that teaches you to see the other trades. This is the trade that teaches you to read your indicators. This is the trade that builds confidence, because this is the plan that has been proven to win more than it loses. This particular plan is designed to optimize your chances of success with the high probability trend trade. And when I say optimize your chances of success, guys, I am adamant about that. There's more than one way to take a trend trade. This is the best way. This is the highest probability way. And then through simulation, study, class feedback, and continuous practice, you're going to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, once you're a chart reader, once you put in the effort to be able to recognize advantages, you will see more trades. They'll jump right off the screen at you. So this is the one that I really want you to pay attention to, especially Black Prince. I know you had a rough day yesterday. Class feedback. You could be a gnat's breath away from everything perfect and just need a little bit of correction, a little bit of focus, a little bit of something on your chart reading to create more of an advantage. But if I never see your pictures, ladies and gentlemen, I never get the opportunity to give you that feedback. Your simple plan for consistency: don't fight the large chart. What does that mean? Don't fight the large crowd, right? These guys and gals, these gays, they create trends. Don't fight the trend. They create momentum. Don't fight momentum. They react at key areas. For the love of fuzzy, don't trade into the key areas. You know where they are. Let them make their decisions. And then define your entry. You'll notice that we haven't even talked about management today. We haven't talked about wins and losses. We haven't talked about anything other than pinpointing your entry. Because great entries create manageable trades. Great entries reduce risk. Great entries maximize profit potential. So you have to define your entry. You need to follow the checklist and pinpoint where the market is most likely to continue and be willing to take that entry. And then once you do that, once you've defined your entry, once you're comfortable with your entry rules, once you can enter where the market is most likely to continue, you step through the portal to the thing that scares the shit out of everybody. Management, pardon my French. Now your brain is telling you that you have something to lose. Now fear escalates, your heartbeat goes up, your palms get sweaty as you watch that small chart fluctuate in between profit and loss. Guys, great entries create manageable trades. Sorry about your delicate ears, Cap. So the management plan in this KISS plan is 100% if-then, the same way your entries are. It is designed to teach you exactly where to put your stops, and it is designed to get you paid sooner than later. So the management plan is based on 2 contracts, and it is 100% dependent, 100% dependent to follow this management plan that you get into the market where the market is most likely to continue. So don't bypass those lessons. And once I'm in the market where the market is most likely to continue, my stop goes 4 or 5 ticks below the trigger lines where the market should not go. That's it. If I enter at the area inside of favorable large triggers, my stop is 4 to 5 ticks below the trigger lines where my advantage is no longer in place. And one of 2 things are going to happen. You're either going to get stopped out of that trade. It's a cost of doing business. It's a normal part of a positive equity curve. Or you're going to get that magical reversal bar in the direction of your trade, that confirmation bar. And once you get this confirmation bar, that is the market telling you that we're going up with the trend, that we're going up with momentum, that we're going up with the clear path, and this is going to redefine where the market should not go. Your stop movement is 2 ticks below that reversal bar, and then sit on your hands. One of 2 things are going to happen. You're either going to get stopped out for a much smaller loss, or it's going to go to your first target, and this KISS plan is designed to get you paid. Your first target is $100 away from your entry. 8 ticks in the S&P, 10 ticks in crude oil. And I'm going to say this right now as I mentioned that tick number. The NASDAQ, you adrenaline junkies, the NASDAQ is not for new users. It is untradeable for 99.9% of new users. Ladies and gentlemen, I've been doing this for 5.5 years. It is typically untradeable for me in the first 2 hours after open. So keep it easy, keep it simple. 8 ticks to your target on the S&P, 10 on crude oil. That's $100 in your account. The first contract comes off. That money is no longer exposed. It's in there. And you're going to move your stop to break even. You're going to take 100% of the risk off the trade. Is it the best stop? Probably not. But you'll craft a plan tailored to your personal goals based on your experience reading the indicators. This stop of break even after profits are taken is specifically done to remind you that the only reason you're in this trade is because of the momentum on the large chart. Because the only reason you took it was because of the clear path. The only reason you took it is because they came right back to the area inside of favorable large triggers. So you're going to get rid of 100% of the risk, and you're going to learn how to hold on for the second target or get stopped out. And your second target is only $200 away from your entry, which means that you just made $300 in one trade, probably over the course of 2 to 3 minutes. And this is the part that I want to remind you, because this is where people have misconceptions about what needs to happen to be a successful day trader. This is a daily goal times 252 trading days in a year. It has nothing to do with commissions or slippage or anything. This is just very, very simple math for those of us that need simple math. $300 a day times 252 trading days in a year is $75,600 a year. 75 grand added to your bottom line. If you take another trade, it goes break even. First profit break even, that's another $100. You're at 6 figures. And guys, this is remedial math to show you that you don't have to make all the money every trade. You can make $100 a pop 4 times a day and be in 6 figures. But, and this is where most people fall short, before you get off of that simulator, before you go live, before you try your prop firm, there's 2 things that you have to know before you sit down for a trade. You have to know why you're going to enter the trade. You should be entering because your rules are met, and your rules should be rules because they have been proven by you. Not because you trust me. I want you to assume that I am selling you snake oil and there's no way in hell it's going to work, and you're going to take that KISS plan and you're going to practice it and you're going to study it and you're going to prove me wrong. Because if you try that, if you put that level of effort in, you're with me forever. Forever. You can't disprove it because it's been proven and validated and verified. So you have to know why you're going to enter. And you have to know why you're going to exit. And you exit when your targets aren't hit and your advantage is gone. The KISS plan gives you both of these brand new users. Rules help eliminate the emotion, because when you believe that your pattern wins 70 to 80% of the time, when you prove and trust that your pattern wins 70 to 80% of the time, guys, you don't have to know what the market's going to do next. You don't have to be fearful because you realize you're not in control, and you know that 2 or 3 out of every 10 you're going to lose. But you never get to pick which 2 or 3. So you've got to know why you're going to enter and why you're going to exit. And I'm going to give you this as well. But we're going to recap real quick. Here's where we're at. We're an hour and 26 minutes into the classroom, guys. We have learned the trigger line and the Fibonacci rules for when it's okay to trade. We've broken them down individually. You know what they mean to you in terms of the advantage. You know how to recognize them, and you've been given a sheet. You know how to study them. You have the ability to simulate, to not risk anything. But more importantly, you have access to me 15 hours every week to look at your pictures, to talk about what you've done, and to help you do it better. You have to tell me what your chart read is so that I can make sure that you're reading your indicators properly. And if you're not, we'll go back to the lessons and we'll fix it. I need to see where your entries are. So I can see, are you taking the lowest risk possible entry, or are you letting fear take over and increasing risk? Are you letting fear take over and reducing profits? I need to see what you're doing so we can see what needs to be fixed, or what needs to be celebrated, high-fived, so that you can repeat it. You've been given a plan. You've been given a solid plan, an awesome plan, a KISS plan that puts you into the market where the market is most likely to continue. It's broken down individually by steps. There's pictures of what it means to you, and there is a management plan to go with it. I appreciate that, Harry. And that's my goal every day. I love what I do. And when you guys are grateful that I'm here, it means that I'm doing my job well, and I appreciate that. The second page is that 50-50 trade, ladies and gentlemen. That second trade, that medium probability trade that'll likely be the majority of your trades. And this one's designed to optimize your chances of success. And I want you to see how the rules are different. It's still a trend trade. But now that strong top or bottom is mandatory. Odds favorable momentum on both charts is mandatory. You can't bypass these rules on the high probability trend trade, learning them and expect to do well with the 50-50 trade. No divergence on the small chart. And it reminds you no divergence on the small chart. And your management reminds you no divergence on the small chart. And I want to show you why, and it goes back to speaking in terms of advantages. Whoa, that's a tiny little picture. If every time you look at your chart, you ask yourself, do I have momentum? Do I have a clear path? Do I have an entry area? As soon as you answer no, 33% of your advantages are gone. If you answer no twice, 66% of your advantages are gone. If you answer no 3 times, what the hell are you doing taking a trade? You've given up everything that's good. And guys, I'm telling you, if your core advantages are gone, even one of them, you better not give up the other 2. You better be able to talk in terms of advantages. The 50-50 trade is void of a clear path, which is why the 50-50 rules say absolutely no divergence, because divergence is a loss of momentum. Using advantages to understand when it's time to take a trade and when it's time to manage a trade aggressively. So, once again, I'm going to drop the trade tracking sheet in the room. I'm going to encourage you to grab hold of it, download it, and use it every day. I'm going to drop a zip file in the room. So Black Prince here is everything that you need. In that zip file is Chart Reading 101. How to study these looks to become a chart reader quickly. Is the high probability trend trade checklist, what it looks like when you're taking those pictures. It is the KISS plan, how to get into the market on a 50-50 trade, as well as a high probability trend trade, and the most pragmatic, basic approach to management you could ever hope for. It's got the daily goals, reminding you that base hits win games. You don't have to hit a home run every time. It also has exit conditions in there. Trend trade, reasons to exit. 50-50 trade, reasons to exit. Momentum trade, reasons to exit. This is a little something just to help you start your plan. Inside of that zip file is also this, and man, this is for you new guys. This is the high probability trend trade broken down into 2 pages. The rules, the charts, the indicators defined, the advantages, and how to identify it. The second advantage, areas that can be a termination condition, how to define it, what it looks like when it breaks, why you have to be patient, and then entry, individually breaking down the entry, and how to study. Everything that you need to be successful. So before I go away for my first break, I'm going to share one more thing with you guys. The key to everything that we do with the software, guys, is building a foundation. I like to tell stories, and I'm going to tell a story about when I started college. And I started college at 30. And I'm already not a math guy. I'm the guy in high school they put in the math class to teach you how to balance your checkbook because bless your heart, you're never going to amount to anything in the math world. That's me. That's where I'm at. So I go to college and I have to take the placement exam to see where I'm at in math. And I had to take what my wife lovingly referred to as village idiot math, which is not college algebra. It is 3 courses prior that you have to take and not get credit for to try and get you to the point to where you can survive college algebra. And I did well on all 3. And then I got to college algebra. So at this point, I'm already a sophomore, and I am finally taking my first math class. And I'm an English lit major, guys. I'm not a math guy. And I take college algebra, and I fail it miserably. And I take it again, and I fail it miserably. And I take it again, and I fail it miserably. And I take it a 4th time. And everyone is on the edge of their seat. And they're going to say, yes, Mark finally passed. No, I failed it a 4th time. And then I passed it. And it took me longer than it takes the average person to pass college algebra. And I finally went off to university and did everything that I was supposed to do. But you've got to build a foundation, and this is no different. You can't expect to be great at something without a foundation. I teach you how to build it. So for you new users, I don't know that that's much of a success story. Maybe I shouldn't share that. For new users, I blanket very conservative rules. I harp on the recognition of advantages, and I give you a solid plan that optimizes your chances of success as you learn to read the indicators. So for you brand new users, all termination conditions are bad. No momentum is bad. Areas beyond the large triggers are bad. Blanket rules, because it increases the likelihood of success. They're not always bad, but until you have the experience to know when to use exceptions, it's just safer that way. And then just like anything, the more time you spend with it, the more you're going to see. This opens doors for you. You must learn the process that yields results. There is a gentleman who's no longer with us, rest in peace, Mark Douglas, that was at the forefront and one of the experts on trading psychology. And he has a phrase that says, stop worrying about whether you win or lose and you'll start winning more trades. Focus on the flawless execution of the method. Let that be your focus, guys. And then that's where the KISS plan comes in. That's when results seem to follow. If you keep it as basic as the KISS plan as a brand new user, if you're okay not looking for all the trades as a brand new user, only the best trades, you can find an extraordinary level of success. I've watched it repeatedly over the years. The further new users deviate from the simple, the longer they take to learn how to be comfortable with pattern recognition. It's gospel truth. I'm coming from the pulpit right now, guys. Question everything. Black Prince, question everything. Harry, question everything. Organic, question everything. Question me. It's okay. I encourage it. I want you to learn. And I also want you to give yourself a little grace. Black Prince, that's for you. You're brand new. It's okay to be. Let's go through the process together. And we'll get you to where you want to be. And that's what I do. If you do your part, I'll do my part. And then Cav said it, and I wanted to go back to it. It will come. Just keep posting your trades. And I will correct them, and it's the best way to get better. The people that post the most typically get to where they want to be the fastest. So those things that I put in the room, let me bring the room over. You can click the arrow and download it. It'll put it in your downloads folder. Do that for the tracking sheet. Do it for the zip file. Or you can even just click on it, left click on it, and you could drag it over to your computer, drop it in a file like that. If you need any help with that, let me know. You have everything you need. So, we're going to get into the second half of class pretty soon here. And what we're going to do in the second half of class is we're going to look at the charts that you guys have posted. We're going to look at your entries. We're going to look at your exits. We're going to look at your chart reads. We are going to examine the way you read your indicators. And I'm going to know how you read them by what you wrote on the chart. Every trade that I go back to, we will discuss momentum, path, and entry, no matter what kind of trade it is, no matter who posted it. So do me a favor and identify it. I'm going to look for ways to make you a better chart reader. That's it. Your profits mean nothing to me. Nobody in this room has ever bought me something pretty. Your losses don't faze me. It's all part of a learning process. Don't ever reply to my feedback with yes, but it won. Trust me on this one. You'll send me into a tangent because I don't want you to have the short-term victory. I want you to have the long-term success, and this class is designed to do that. So I'm going to encourage you to follow my lead. I'm going to go take 5 minutes, and I'm going to walk away from the computer, and I'm going to stretch my legs. And when I come back, we're just going to run to the end of class. We're going to answer every question posted in the room, and we're going to look at every chart posted in the room. So guys, go stretch. I'll see you in 5. Post second half of class. Black Prince, have an amazing afternoon. If there's anything I can do for you, don't hesitate to reach out. I haven't met anybody that participates that we can't get to where they want to be. So I'm looking forward to working with you. All right, guys, I'm going to scroll up to the top of the room and we're going to start looking at some pictures and see what you guys have been up to. Let me find the beginning of the day here. All right. Harry, this was yesterday afternoon, but I wanted to bring it in just to say, man, I'm excited because now I know you can post pictures. Keep posting them in there. And when we look at this one, I know it was a test, but do you see how you went long directly into a termination condition? I wanted to bring this up, and I know you're practicing and just testing and doing stuff, but I always like to look at the chart read. So if you did post this in the room and you were asking for help, that would be exactly the lesson that we gave is, hey, man, look at that. You saw the area inside the triggers, but that darn termination condition got you. You had momentum, not a clear path. You took a nice entry, and it just didn't work out. Yeah, I know. But that would be the kind of feedback that you get. And honestly, I like everything about that trade except for the termination condition. Even though it was a test with momentum and a great entry. All right, Rob. I was looking at this one this morning, Rob. Everything says down. That fib wasn't there yet. That was an update fib, which means that you got in just below after the pullback to the area, and you wrote it down to the fib, and that is absolutely beautiful. And then, Rob, get your mittens on, because you let it break through the area, and then when it pulled back, that's when you decided to head down with it, and you took it to the next fib. So great patience and great respect on the termination conditions, Rob. Everything's working exactly the way you were hoping it was going to work. All right, Miss Jen. Odds favorable momentum. Jen didn't bother to write that it was a 50-50 trade because then she would have had to identify the strong bottom and know that two divergences isn't her best option. And that's okay. But with all of this momentum and the potential to break, she takes the entry just above the midband, right inside of the triggers, and this is textbook. Absolute textbook. Takes quick profits, rides the second one up. And Miss Jen, the one thing I want to point out is that these pink 1-to-1s on your 13-2, and I don't know if you noticed that you had a 14-2, these pink 1-to-1s on your 13-2 really don't come into play on crude oil or S&P. It's just not enough movement to really create it. And did you notice that you were a 14-2 and not a 13-2? I wasn't sure. No worries. I'm glad I looked up there. But beautiful trade, great trade, easy money maker. With all that momentum and a perfect entry, it's difficult to not get paid. It'll happen every now and then, but you got to work at it. All right, Andy, odds favorable, 50-50. It's interesting, Andy. Why do you have synthetics on your large chart? Just curious. Maybe there's a reason because of the ale class, but you're absolutely odds favorable, potential to break. You didn't take a trend trade, but what you did is with all that momentum and the potential to break, you just rode momentum and got paid. Nicely done. So, Andy, how do you use it? This is what I ask people when they show me things on charts. How do you use it? How does the 55-8 large triggers work their way into your trading plan? What do you have written down? Anything? It lets you know the trend is going up. Okay, as long as you have a plan for it. Sometimes people add indicators. Jen's trend was going up. That trend was going down. That one was going up. As long as you have a plan for it. A lot of people think that adding more indicators is going to create more success. Usually it confuses people, but as long as you know why you're using it, use it. Have fun. All right, Rob. Rob, are you in here? Andy, you're good at ignoring indicators. Is Rob in the room? I guess not. All right, guys, I'm going to show you what I do and why I think annotation is so important. There's a short trade right here. Does everybody see that? The annotation says strong triggers. The small triggers are up. The large triggers are flat. There's no separation. We're in an uptrend. And the trade is short. So we're fighting direction. We're fighting trigger lines. We're fighting everything. Guys, the annotation needs to make sense. There's absolutely no clear path because it's directly into support. There's no clear path above. It's directly into resistance. This market has been caught in a channel for the last hour and a half. The jump in was 3 ticks before a termination condition on the large chart in an uptrend. And, you know, I'm always happy when you guys get paid. I think if you're going to get lucky, I love when you make money on the side of luck. There is no reason on God's green earth with anything I teach in this classroom to take a short trade into support, into an uptrend with all your triggers up on the large chart. Does that make sense, guys? But Mark, I got paid. Okay. The likelihood of you getting paid repeatedly goes down dramatically when you fight everything on the large chart. So much so that when I hand you a plan, the first thing that it says is don't fight the large chart. Guys, that's the kind of feedback you're going to get on these trades. All right, go on to the next picture. And Miss Cindy, I see you in here. Remember when you used to say hello? Those were good times. Only thinking of that because we got Adriana's here. All right, Adriana, if you're listening after the fact, let's see what we have. All right, so you have a weak bottom. You have the termination condition up. You have it on the large chart. It's confirmed on the small chart. And the triggers roll. And I'm not sure where you're entering here. Or why you're entering here. Target at the first fib. And you just hold on through 2 trend trades. And out at the second fib. So this is one of those white bar trades. Adriana's like, Mark, I'm going to make you work for it. I love it. So let me go through the whole process. Termination is the key to everything. Fast triggers roll, the second rule. White bar prints off the termination. You sell. You get out at the first sign of trouble because you know that could create a bounce and take you out of the trade. And then once you're so clear of your entry, you just let the 1 minute chart do its thing all the way down. You let the range chart do its thing all the way down. Adriana, this is beautiful. And it all starts with the termination condition. And that's the key to this trade. And then you had it confirmed. I love this trade. Nice job. Beautiful trade. And it fits the rules. 100%. Great hold. Awesome hold all the way down to that fib. Guys, this isn't a high probability trend trade. This is a trade that was taught in a class that Adriana took with my brother. And the execution is beautiful. Absolutely beautiful. All right, here comes Ron with the pirate trade. Not a trend trade. Counter trend, white bar really shouldn't work trade. I love the name on this one. What does that mean? That means that his large chart says down. His large chart even has momentum down. But his large chart is trading directly into a termination condition. None of the triggers are broke. That's kind of the key to this one. 3 divergences. Ron gets in off after the third divergence at the area that has the potential to hold. His entry is after the divergence prints, and his exit is right before the reversal bar marker. And this is a pattern that was recognized through an awful lot of study. And it's a little snippet. And this is the pirate trade. And Ron, awesome execution. Awesome execution. And if you guys are newer, this is what we do for the second hour. It 100% revolves around your pictures and your questions. Miss Jen, termination condition, no triggers through, smalls roll. You take the pullback to the large triggers. Nice trade, taking advantage. Jen, this is the same one that when you first started with me 173 years ago, this was your trade. This is the trade that I think you took and didn't know why. And now you know why beautifully. When the termination condition happens, when the small triggers roll, sell a pullback to the small triggers, which looks just like the pullback to the large. I mean, this is gorgeous. Out at the first sign of trouble, and since there's no reason to blink, take it to the next. I like this. Really well done, Jim. And I told you, I don't forget anything, so I still remember you posting these in the very beginning, and you had no idea, but you were doing it beautifully, and you didn't even know. Great job. Miss Adriana, once again. Momentum entry, so what does that mean for the people in the back row? There's 475, 475. Lot of trouble on the large chart. And Adriana lets it dance. She's like, this is ugly. Divergence from a fib, another divergence, all this bouncing. Ugh, I don't want to be a part of this. And then everything rolls and every chart agrees. And she says, you know what? I'm going to take that little snapback right to the area that was giving me so many fits. And I'm going to ride it up to the next area because my large chart says that's what's most likely going to happen. Adriana, another beautiful trade. Nice to have you posting in the room again. And it looks like you found your groove. Your patience is amazing on this trade. Your waiting for it to be perfect is amazing on this trade. Really nicely done. And props to the ladies. Look at you getting in here, showing the men how to do it. Ron says anything they can do. Odds favorable momentum. In and out. Quick little snippet. Bing, bang. And Ron, you cut that one a little tighter than you usually do. But with that level of momentum from a good, boom, boom. Easy win. Nice trade. Called that one an RBI. I love it. All right. Miss Jen again. Odds favorable. Everything's cranking. You get in on the 50-50 trend trade. And I like the way you did that. Starts up, you get in at a better price. Being psycho, enter at the lowest point with least risk. Love it. Everything goes up. Targets, markets moving fast. Gorgeous trading. It's just a trend trade. Right from an area inside of triggers. And the expectation is the next fib. And that's exactly where you took it, Jen. Great job. The ES has not been giving good opportunities this morning. It's psycho. Did anyone post? No, looks like most of these are crude oil this morning. It happens some days, doesn't it? It happens. I was telling my buddy, some days you're the boot and some days you're the butt. You never know which day it's going to be. All right, Cav. Price reverses from divergence. Odds favorable momentum. Everything is down. It is into a termination. But with that level of momentum and strong triggers, Cav says I can risk 50 bucks to see if they retest the fib. And that's exactly what they did. And that's exactly where he exited. And when I told you guys that terminations might not always keep you out of a trade, Cav's showing a perfect reason. Cav says this is a strong top. This is the best momentum ever. This is strong triggers, no divergence, and the lowest risk entry he could ever hope for. And he knows where it's likely to reverse, and that's where he gets paid. Once you know what you're against, once you know what your advantages are and your disadvantages are, you can begin to make decisions and take trades that suit your needs. Nicely done, Cav. Good looking trade. Same thing. Everything says up. The path is clear. He takes the pull back to the areas right inside the triggers. I think it's the same one Jen took. If it didn't get him, he could have gotten it again. Takes it all the way up to resistance. Same look. Nicely done, Cav. 2 for 2. Miss Jen. Bought straight into a term. Yeah, you did. Everything is cranking up, and you said, you know what? I need to be a part of this. And you did. And Jen, can I ask, did you protect yourself when you hit that fib? That would be the only thing I say. If you're going to cut it short, don't lose, right? Don't give it all back. Because if the fib holds, you want to be prepared. You knew what you got into. And your small chart told you could hold a little longer. So even though you broke a rule a little bit, you broke it well. Steve Diego. Steve likes to stack it. Check this out. This is what we call a strong trending market. What is a strong trending market? A strong trending market means that you have 30 bars on your large chart the same direction without a reversal bar. The people in control have defined that the strength is there and you want to be a part of it. So as long as you have a strong trending market and no terminations, this is the one time where you can say, okay, rule number 1 is good. And those triggers look like the smalls are riding the large. Steve says, with this strong trending market, let me get above the trouble and I'll see if I can't just grab a little bit. It's everything is based on momentum. I'm not even going to give momentum a chance to subside. And that's an easy 220 bucks, 60 seconds. Really nice trade, Steve. Great recognition of the strong trending market, setting you up to take advantage. And then the exact same look on the NASDAQ. Everything is screaming up. Steve says, let me grab a quick $200. I'll get out before that momentum goes away. Momentum and path. I try to say it every morning that once you understand momentum and path, you'll find your entry. Once you can identify these two, the other trades begin to present themselves. And Steve did an awesome job of it with that. And then Cav, people are giving you the strong arm on this one. What was it? Love it. Termination that reverses the market. Odds favorable momentum. Pull back to support right inside of favorable large triggers. I mean, it's easy, right? $1,400 today. And then the most important thing, Cav said, third trade, going back to sim. One of the things that hurts traders, especially new traders, is over trading. And earlier, I asked you guys to embarrass yourself by admitting to pretty common mistakes. Has anyone ever been up 2 or 3 grand in their account and ended the day negative? My hand is going right up. You're trading, you need to know why you're going to enter and why you're going to exit, right? Your trading plan should define When it's time to stop, whether you've hit your daily goal, or when it's time to stop because you lost it. The more you trust your plan, the easier that is. I went to Sim at 6:15 this morning. 6:15 a.m. I was on Sim. Already shut down my live market, shut down my live connection. Because I don't want to give it back. So, good stuff. Great. And I love seeing that. And Jen, thanks for admitting. We're like peas and carrots. Great job. Great trade. Even better job shutting it down. The money was made. There you go. Gary figured out how to shut me up. If you could share that with my wife, she'd appreciate it, I'm sure. All right, Bob, be the man. You've had some pretty solid pictures. Let's see where we're at. Strong top right off the termination. Creates a full reversal. Absolutely beautiful. Smalls below the large. Larger above. Space is there. Odds favorable momentum. Absolutely beautiful. This fib hadn't printed yet, Bob. That was your 8 o'clock fib update. So your path was clear. Absolutely beautiful. Pull back to the area inside of triggers. Take trade on the reversal bar. You can. You don't have to. And look at it go. Man, nice one. So, Bob, when are you going to start pulling the triggers on these? When am I going to start seeing entries? When am I going to start seeing you getting into this market, using that simulator? And don't you dare tell me you're going to wait till you're good at it. Simulation's how you're going to get good at it. Tomorrow? Okay. Odds favorable. Pivot top. Not 100% strong. Perfect. Odds favorable. Is it a clear path? So, Bob, this is the one thing that I want you to define. Your small triggers have smashed through support, but your large triggers haven't made it yet. Can't call this a clear path yet. This is that potential to break because of the momentum. Does that make sense? No divergence on the small chart, low risk entry. It's absolutely beautiful. And it goes right down to trouble. 50-50. I just wanted to make sure that you know that. And one thing I want you to do today, since tomorrow you're going to show me all these great entries, and this is for everybody. This makes my life easier. Right-click on your entry chart, Bob, and go to Data Series. Scroll all the way to the bottom. And if you guys will always do this for me, text and marker. Make sure that that's the set on plot executions. What that does is it shows me exactly where you enter and it shows me exactly where you exit. So when I look at your charts, what I can do, if I see an entry but the entry is really low, we can talk about how there might have been a better entry or how there could have been less risk or something like that. But dude, you're killing it. A month not trading, only studying, appears to be paying huge dividends for you. Good stuff. All right, so let's talk through crude oil. Do I have odds favorable momentum? Let's go through the flow, guys. Do I have strong triggers on crude oil? I'm going to take a picture so we don't get caught up in the movement. Morgan says no. Morgan didn't believe in his answer and he deleted it. The answer is no. I don't have strong triggers. I appreciate that, Morgan. Morgan's making room for the new kids. That's okay. No, don't be sorry. You can always do it. All right. So I don't have strong triggers. So instantly, I say to myself, I'm missing 33% of the good stuff. Is that fair? But I'm a new user and I want to go through the process completely every time. Do I have a clear path? So I have to go through it. Did price reach an area? It didn't. Are all of my triggers below the previous area? They are. So what do you guys think? Do I have a clear path? Says wrong. Harry, do you see it? What do you think? Okay, see, that's exactly, this is why I do this drill. So let's talk about what it looks like when the market breaks an area. So right here, oh, so what you've done, Harry, and I'm telling you, every time you guys do this, you will be better. Harry, what you've done is you've confused momentum, rule number one, and you have created this little love child between momentum and the clear path. They are unique. Strong triggers is the separation. That's it. Termination conditions, clear path, has nothing to do with momentum when you're looking for the clear path. Does that make sense? So this one is the separation of triggers. This one is trigger location. And these rules are independent of one another. They're completely separate advantages. Does that make sense? A lot of people do that. When I say, hey, do I have momentum? They'll be like, yeah, but it's a termination. And you automatically go to the second one. So we're going to keep them apart from one another. Did that make sense, or did it only make sense in my head? You're absolutely right that that is weakness. And some people will say, okay, no more trade, not even going to look. But we're going through the whole drill just to break down the rules individually. So when I'm looking at the lowest point of price in this downtrend, let's just talk about, okay, again, has nothing to do with it, right, Harry? I've never, in your time in this room, mentioned bars inside of the triggers. Ever. How come? Because it's not important. Let me find this real quick. Man, this is what makes the class great. So when you ask yourself, do I have momentum? The only thing that I want you to worry about, the only thing I want you to focus on, and we'll just do these where they're there, is there separation between the small and the large? Notice that it doesn't talk about bar location. It doesn't mention Fibonacci. It has nothing to do with entries, and it has nothing to do with tails. The only thing that momentum is that separation, that strength. So if you have that look, then you have strong triggers. Does that make sense? And I think that, Harry, we all overthink. We all try to look for the trade instead of the pieces that create the trade. I know I do. I still do. I try not to. So then when we talk about termination conditions, what we're doing is we're asking ourselves those key questions. And let me see if I have a good picture. When we talk termination conditions, what we're really doing is we're saying, okay, did price reach an area? Did price reach a divergence high? Did price reach Fibonacci resistance? Did price reach these yellow 1-to-1s or fibs, right? And if it did, we have to say, where are my triggers? And if it didn't, well then we're hoping that it gets to that next area. And that's always the recipe. Until I hit a fib, a yellow 1-to-1 or divergence high, Harry, this red line is a target. So it's a target right until price reaches it. But once price reaches it, I'm done with price. Price bars have absolutely no bearing anymore. The story is told by the triggers. If the triggers remain below resistance, it's a termination. If the triggers are half through and half not, it has the potential to break with momentum. But if the small and the large are beyond the area, my path is clear until it reaches the next area. So what happened in the picture that we're playing with here, let me go back to this one. So what happened in this picture is here it was a termination, there the triggers were straddling, and eventually small and large got below support. So I can say right here, fib is clear down, and it will remain clear until I reach the next area. Does that make sense, everybody? So once the small and large get below support, support's done. Rear view mirror, it's acting as resistance. And if price down here hasn't hit anything, no lines, my path is clear, and it will remain clear until I reach the next line. Does that make sense, Harry? So once the triggers break through, I'm clear until I hit that blue fib. Awesome. So when we go through and we're talking ourselves through these potential trades, get up there. First we ask if we have momentum, and you guys did a great job. There is no momentum because the smalls are inside of the large. So when we ask if we have a clear path, we go through that. The first thing I always ask, did price reach an area? Did price reach an area? It did not. So if it's a no, did triggers clear previous area? The answer is yes. I have a clear path. Does that make sense? So that's kind of a little order of operations. When deciding the clear path, first I asked did price reach an area, and if it didn't, did the triggers clear the previous area? And if they did, we do in fact have a clear path. So what we have now on our large chart is I have 33% of my advantages. Let me go back. I don't have momentum, but I do have a clear path. So if we're going to go to the small chart to be a tiebreaker, to say, you know what, without momentum, as long as I have a clear path in an entry area, I'll take it and I'll manage it assertively because I know I don't have momentum. Is everybody with me so far? Because I don't have momentum, but I do have a clear path, I'm going to let the small chart be my tiebreaker. And if I have a pullback to an area inside of triggers, I will take a short and manage assertively because I'm missing 33% of my advantages. Are you guys with me? This is why we talk out the advantages every time. What do I see? What's in favor? What's against? So you have to know the language, right? And the one thing that you'll notice is that I don't have an area inside of triggers. I have an area, but it's not inside of triggers. So is the fib going to stop it? Is the other fib going to stop it? Is the mid band going to stop it? Is it going to go up to this fib? Is it going to go up to this mid band? Once I get to the wrong side of the triggers, I just have no idea. Does that make sense, everybody? So by only speaking in terms of advantages, this is 60% gone. 66% of my advantage is gone. Which means that if you take a trade, you're trading without the advantage of strong triggers. You're trading without an area inside of favorable large triggers. Does it mean that there's not a trade to be had? For the new user, probably. For the experienced user, Kurt says, my plan says, with everything down and a clear path, he'll enter that trade with a confirmation bar because he has room to get to the next fib. And Kurt, your plan got you in at 72.52 because it establishes risk behind the reversal bar and got you out around 36, and that's a hell of a nice trade. That's about $170 per contract. So the reason we do this every time, the reason I talk about this every time, is you have to go through. What do I see? What does it mean to me? And here's the same thing. I don't have momentum, but I do have a clear path. I don't have an area inside of the triggers. Is the mid-band going to stop it? Is it going to continue up to the other level of fib? To the other fib level? I don't know. Once I'm on the wrong side of these triggers, guys, I have to make a decision. My decision is don't trade. I hate trading from the wrong side of the triggers. Kurt says, if I get a confirmation bar off that mid band, I'll take a shot at it because I've got room to the next fib. Once you learn to read your indicators, you'll begin to create your plan. And there we go. Right up past it, right? Same look as this one. Different reaction. This is why plans are designed to keep you safe. I love that. That is an amazing reason of why we define this as where the market should not go. Because we have absolutely no idea where it may stop. And no confirmation bar, Kurt, no trade, right? By forcing it to confirm, it keeps you out of the trade if it doesn't start to go down. I love it. Okay, here's the S&P. Termination to termination, everything rolls. When it rolls, the potential to break, pulled right back to support inside of triggers. Who's in the midst of making money right now on that trade? Hopefully somebody's in it. Hopefully somebody took that pull back to an area inside of triggers from that strong bottom and said, let's make money. This is my pattern. This is what I'm looking for. You're waiting for a chili dog? All right. You're waiting mini NASDAQ? You're trading the mini NASDAQ? Are you trading it live, Kurt? If you're not, why the hell are you on the mini? If a trade, okay. I don't have any experience with a mini NASDAQ. It's been teasing the chili dog, but it's been giving up trend trades. Guys, when you start adding trades to your plan, it doesn't mean you have to abandon the beautiful ones that you learned in class. All right, Bob, be the man. Oh, look at you taking trades. I love it. All right, strong top, odds favorable. Got in a little late, jumped in with all the momentum. Got out at the fib because of the momentum. Let it clear. Got in at the fib. And you're still looking for targets. I like it, Bob. Fought everything. Not sure why you took that trade there. Directly into a termination condition. Didn't work. People don't think I see these, but I do. Fought momentum, fought direction. Hope that blue Fibonacci support would hold. Sat through everything running your ass over. And then it went up. Traded directly into a termination condition. Man, Bob, take them all. Take every one of them. Every one of them. And show me every one of them. Because remember, guys, when you're practicing, you're creating muscle memory. And if you're just practicing getting in and out, moving stops, that's awesome. But if you're really trying to trade, focus on the rules. Even if you fall short, focus on trading the rules. All right, Pete, termination, everything reversed. Same one we talked about. No momentum, clear path. And then Pete says, I like this one. Pete gets in just below the fib. All right. Pete, we're going to turn it into a lesson because this is a good one. All right, this is for my new users. Price reaches an area. All the triggers are above. This area could stop, reverse the market. No short trades. So where are my new folks? Organic and Harry. Does that make sense? Question mark. All we did here is define the termination condition, right? And that's exactly where Pete got paid. Beautiful. Does everybody see that? Price reaches the area. It could stop, create a bounce, reverse, no trades into it. Let me show you what Pete saw. Let me change some wording. All right, you ready? So check it out. Price reaches Fibonacci resistance. All the triggers are below. Harry, that's a termination condition, right? Absolutely no thoughts of going long into that fib. Do you guys see that? It's the exact same language. This one says no more trades because it fights everything. Take care, Cav. So let's go through it. The trend is down. The smalls are down. The large are down. Everything says down. And because it's on the wrong side of the triggers, Pete picked the area that is most likely to stop the market if price reaches it. That's how he picked his entry. And he says, if it goes 4 or 5 ticks above that fib, that is likely to stop the market based on the language from rule number 2, I'll get out of the trade. But with everything saying down and support has become resistance, that's a pretty low risk shot at taking the trade. Does that make sense? Guys, this is chart reading. This is taking the very basic rules. This is taking the rules where the language is 100% clear and using it to your advantage outside of keeping you out of trades, but rather putting you into trades. And then let me show you, because let's go back to the ES real quick. That was the same look, right? And if he got in just below the fib, he lost that one because he's void of the advantage of momentum and he doesn't have an area inside. And to Pete, this is acceptable losses. Because when you make $1,000 here, you're willing to give up $150 here. Great stuff, Pete. Awesome, awesome chart read there. You guys will be surprised at how the language of trading finds its way outside of the basics and into the plans that you're creating. So Morgan, how did waiting for the chili dog work out for you and skipping the easiest trade ever? Remember, guys, great if you didn't want to take a trade all day today. This is what happens a lot. Hey guys, most of what I teach comes from mistakes that I made, just so you know that. What typically happens, and I'm gonna drop the view down on this to 100. And these are all different trades. So I start on the high probability trade and I learn the lessons and I commit to it and it's awesome. And I take that trade and I stick to my rules and I feel good about it. And I said, you know what? I'm ready to take that 50-50 trade. I'm ready to take that medium probability trade. And what a lot of people do is they forget that this one exists. And then they learn a momentum trade and they forget about the 50-50 trade. And then they forget about that trade. And guys, the goal is that you learn your first trade so effectively that it's second nature. So when you add trades, now it's not, okay, instead of the trend trade, I'm taking the chili dog. I'm going to take the trend trade because that's a great trade. And if the chili dog fails, I'm going to let it turn into a trend trade. Yeah, Morgan, and that's cool. One trade is fine. And you'll get to the point to where you have multiple. You really will. And there's days where the chili dog is outstanding, and there's days where maybe it's not the best of the best. So, good stuff. And then there's Ron. Back of the bar clears, odds favorable, gets in, gets out. Beautiful. And you know what, Morgan? That's great. That's great. That's a little self-awareness that'll probably pay dividends long term for you. Back when I used to race motorcycles, there was a guy that taught a superbike school. Actually, one of his old instructors is one of our clients. A gentleman named Keith Code. He was at the forefront of motorcycle racing and teaching people to race motorcycles. And he used to say that every time you're on the motorcycle, you have $10 worth of attention. And when we talk about what we do here, let me go to this picture. Initially, I'm spending all $10 of my attention to recognize strong triggers. And then after a couple days, it doesn't take much to see it because I've really focused on those strong triggers. And then I've put $1 into strong triggers. That's all it takes. And it takes me $9 to figure out whether or not I have a termination condition. Man, Harry, you're so welcome. And then this look becomes second nature. And I've got $2 invested into my large chart. And now I've got $8 worth of attention to figure out my great entry. And eventually, this becomes easy. And I've got 3 of my $10 invested in this high probability trend trade. Bob B, great work today. It's good to see you posting, man. It's nice to see you posting in the room. And once I'm down to $3 or less of attention to find the trade that I'm looking for, that's when I add the next trade. Because I may confuse a couple rules. So I always thought that was kind of cool. How much are you investing into reading these indicators? And if it feels like a lot, if it feels like it happens slow, if it feels overwhelming, or you don't see your great entry until it's about right here, all it means is you got to just keep going through it. You got to keep studying a little bit. You've got to be able to make them second nature. The beauty of Trade Copier. Main account goal, daily goal hit, all the following accounts, profit for the day, $7 grand, 6,600. Great job. All right, Pete, show me a trade copier on a losing day. I like trade copiers. I think it's pretty cool. Even found one that is that's free, NinjaScript. Pretty cool, and I got my buddy testing it. I love the trade copier. Now, you don't have to, but just remember, stick to your plan, follow your rules, learn how to get paid, and then that $1,500 grows exponentially. That's really what I was getting at, Pete. And if you have a losing day, know when to stop. But this kind of spreads it out. I love trade copiers. I don't use one personally, but I love trade copiers. And congratulations on a $7,000 day. That's amazing. Odds favorable, 50-50, strong bottom. NASDAQ sideways went to your old friend crude. Pull back to support inside of triggers. Money, money. Absolutely beautiful, Andy. Great trade. And then Morgan. In and out base hit for Morgan. All the patience Once it clears, make the money because there's nothing in the way. That's awesome, Morgan. I'm glad that one worked out for you. Do that on a 10 lot. It's $1,000 a day. You live on crude. I only trade the NASDAQ. That's it. But I don't trade it during the open because I'm with you cool kids. NASDAQ for me is readable before and after. I really can't do it. That wasn't you? That was you. This trade was you. Pete lives on crude. Crude doesn't move after class, so I can't really trade it. Look at that, straight to the fib. From fib to fib. If you get nothing out of today, from fib to fib, you'll find your way to get paid, whether it is an HVA trade or a momentum trade off the bottom, whether it's a 50-50 trade, or whether it's a chili dog trade, getting you to the next one. You have a 1 lot with a copier to 2 accounts. That picture was wrong and he was going to post it, so I didn't. No, I love that. I found, my buddy was asking me, he goes, man, is there a copier that's not so damn expensive? There's one called Prop Trader Tools. It's free. It's a Ninja script. And he's been running it flawlessly for a while. I don't know if anybody's interested in it. I'm not endorsing it because it's not mine. Man, Google is your friend. Google is your friend. He asked me, he goes, is there anything? It took me 8 seconds on Google to find it. Yeah, Replicanto. The Nexgen funding copier. I'm not sure if it's 100% done. We've done a lot of testing on it. It's going to be like $19 a month. That's it. For everything that we do. And so far it's been great. Been pretty awesome. We're getting close. This is our dummy site. Evaluation accounts, trade copiers, you can select your leader accounts, going through. We're getting so close, guys. So close. Can't wait. Look at that termination condition. Boom. They work, don't they? We've got 20 minutes. Right on, Pete. Affordable indicators. I've heard of them. As long as it works, right? As long as it works. Has anyone ever bought a beater car to commute in? I have. I bought a little Hyundai Accent hatchback because I had like 1,500 miles a week I was driving. Ron better be wearing them. Yeah. Have fun, Ron. Enjoy the sunshine. I think we're going to be 85 today in Texas. I'm pretty excited. I'll be in the tattoo shop, hopefully drawing on people. Guys, what do you want to talk about? It's raining there, Morgan? Well, it's because you're in California. I don't know what that means about anything, to be honest with you, but you know. You're in California. I was going to say, I didn't think California rained a lot. When I drove the length of it, it was crazy. That was all those crazy storms 2 or 3 years ago. When the mudslides were tearing everybody up. Price reaches the mid-band. Large triggers are a full bar away. Gap theory says price is likely to close the gap to those triggers more than a full bar away. Let's see if they do. This is when the mid-band is a termination condition, when the large triggers are above the reversal bar marker. Doesn't mean it has to, but it means any little attempts at shorts in here are less likely to work. Look at that momentum. Right to the 1-to-1s, to the tick. And that's where the bounce came. What do you want to talk about, guys? We're getting quiet, so I'm going to end the YouTube.